I was trying to compare Bitcoin to something I knew, and I didn't really know what to compare it with. Another currency, which is not a perfect comparison. A digital asset, well, they are all centralized, so it was not proper comparison. There is no proper comparable. There is nothing that is like Bitcoin. It is for the first time a commodity, so an asset without an issuer that exists in a digital form. Something that did not exist, that still does not exist beyond Bitcoin, and therefore, it's very difficult to understand what Bitcoin is because we have no point of reference. And when I jumped in the rabbit hole, that's where I discovered all the other great things about Bitcoin, what it means well beyond finance or just a way to make money. So there is so much around Bitcoin. It's such a rich industry and world. This is something that obviously you do not see at first hand. It took me years of studying it to discover it, but that's also how I came to the conclusion that there would never ever be anything more important to work with in during my lifetime than Bitcoin, and I don't expect to move away from Bitcoin anytime soon. You would not buy a bar of gold if you knew that gold in the future might become less scarce, might become less durable, might, whatever, or that just there is somebody who could change the chemistry of gold and the physical characteristics of gold. Well, for the same reason, you would not want to buy a digital asset whose digital characteristics can change over time. You want one that is immutable, like gold is, like Bitcoin is.
Hi, and welcome to Bitcoin for Professionals. Today we're joined by Thomas Jeegers. Thomas, welcome.
Well, thank you for having me, Justin.
Great. For those of us who haven't met you yet, including myself, can you tell us a bit about where you grew up and what shaped your early interest and your values?
Yeah, sure. So I'm coming originally from Belgium with a traditional economics background. After my studies, I moved to the banking industry where I got to specialize in finance, especially financial risk management. I completed a few advanced financial certifications on the way to try to learn as much as I could on the banking system, monetary system, and finance in general. So I completed the CFA program, the FRM program. Then I did my MBA at INSEAD in Singapore and France. And after that, went back to financial leadership in a different industry, in healthcare. And over that period, I, let's say, rediscovered Bitcoin that I've been involved in from the sideline for a very long time. A few years ago, I decided to take all of my free time, research Bitcoin in all of its details, learn everything I could about the topic, and ended up writing a book that was published by Springer Nature in summer 2023. It was very well received by the industry. I got some fantastic feedback, including from people relatively well known in the space. Then it was time for me to move full-time to Bitcoin. I looked for Bitcoin-only companies or Bitcoin-only investment funds, and I was fortunate to discover Relay, with which I had a great fit, and I joined just over a year ago as CFO and COO of Relay. Relay is one of the biggest Bitcoin-only broker in Europe, based in Zurich. And ever since, life is great. Bitcoin is growing, Relay is growing even faster, and enjoying my time widely.
Okay, that's great. So it sounds like obviously you're someone who's very accomplished. You're lived in multiple places. It sounds like you speak multiple languages as well. Can you tell us a bit about that? Like, it doesn't just happen by circumstance. What sort of characteristics and values do you think that says about yourself?
Well, I like to challenge myself, and you mentioned languages was one of the things that were important to me. So, growing up in Brussels, in Belgium, you grew up bilingual anyway, with French and Dutch, learned English obviously on the way. I was used to go on holiday to Italy, so I picked that up as well on the way. And right after my studies, I decided to move to Austria and started working exclusively in German. that I also had to learn on the way. Fortunately, I had an Austrian girlfriend who is now my wife and the mother of my children, and I did most of my career in German, from Austria, Germany. Then worked a bit from Amsterdam in the Netherlands, from London, and I mentioned also spending some time in Paris and Singapore. So yeah, I've been traveling quite a bit, but now settled in Vienna, Austria, and enjoying life to the fullest.
Okay, that's great. Okay. And look, for myself, it probably took me a few different passes at Bitcoin with several years in between before I finally got over my ego and realized that I didn't understand what it was and looked into it properly. Can you tell us a bit about what the path was like for you? Were there several touch points? Were they years apart? And what was the sort of specific aha moment where it clicked for you?
Yeah, sure. Actually, what you just said echoes rather well with most people that are coming from traditional finance or traditional economics. Including myself. When I was first exposed to Bitcoin, I was like, nah, that's not exactly the kind of things that I had in mind for future potential monetary system. Even though I was already interested into the whole concept of, more exotic ways of refining the monetary system. In particular, during my studies, I was fortunate enough to be exposed to the concept of complementary currencies. So instead of having a single currency for a country or for a region like we're used to, there are actually places where you have multiple currencies working in parallel, and that actually have the impact of stabilizing the economies overall. Because instead of having, peaks and through in the traditional financial cycles, you really have these complementary currencies acting as a buffer that make the entire system more resilient and therefore tend to outperform the systems with a unique currency over the long term. So at the time, let's say late 2000s, early 2010s, that was still a concept that was relatively in the shadows. Not many people were talking about it. I was very interested in the topic. I thought it had enormous potential, and I was looking for, a complementary currency, something decentralized, so not emitted by a central issuer, but didn't really think through how that would work in practice. I was more hoping to get a currency backed by a basket of goods, like with some gold and other types of commodities behind it. And then when Bitcoin came along, I was exposed to it for the first time in 2011. I looked into it and I thought, you know what, it's just code. There's nothing that backs it. I don't think this will be a great thing. A few years later, when I was at the bank at ING in Germany, I was actually fortunate again to be selected to become the local expert on blockchain technology. So having studied economics, finance, and computer science, that was actually a good background to start on that path. I looked into Bitcoin again in details, learned how it works, learned about cryptography and mining and all these things. And then when I was in front of the full board of directors of ING in Germany, I was telling them that 400 and something dollars per Bitcoin was grossly overpriced. So as you can imagine, I again did not get the full potential of Bitcoin. I did not get the concept of the asymmetric bet that it was representing at the time. Maybe one thing that I still believe I correctly identified at the time is that the level of risk of Bitcoin was fairly high. So there was at the time a very high likelihood that, it would be broken, hacked, possibly banned in a way that it would have terminated Bitcoin definitely. So there were several possible attack vector for Bitcoin at the time. So I realized that, and I really didn't think that it would go through another decade. And obviously, with a background in investment management, portfolio allocation, valuation methods, I was used to discounted cash flow methods. Bitcoin does not have cash flow, so how do you give value to something that does not have cash flow? Obviously, there are ways, but at the time that was not on my radar. I was trying to compare Bitcoin to something I knew, and I didn't really know what to compare it with. Another currency, which is not a perfect comparison. A digital asset, well, they are all centralized, so this was not proper comparison. I did not really have gold in mind, and as Sinead O'Connor was singing many decades ago, nothing compares to you. And I think this is precisely what applies to Bitcoin. There is no proper comparable. There is nothing that is like Bitcoin. It is for the first time a commodity, so an asset without an issuer, that exists in a digital form. Something that did not exist, that still does not exist beyond Bitcoin, and therefore, it's very difficult to understand what Bitcoin is because we have no point of reference. We have no comparable for that. Over time, the logic of Bitcoin being actually digital gold was the one that anchored itself in my understanding the best, and I still think that today it is probably the best analogy that we have. So it is like gold in the sense that it is a commodity. It is something that does not have an issuer, that has a fixed supply. In the case of gold, comparatively less expanding supply than for all other assets. In the case of Bitcoin, absolutely fixed supply, and something scarce and durable. So, except that Bitcoin in this sense was more scarce, more durable, more divisible, more portable, more, every possible positive characteristic that you would attribute to gold, Bitcoin had that and was superior to that, with the most important one, that it was digital, something that obviously was one of the major Achilles heel from gold. And so it took me another 5-6 years to really get myself into Bitcoin. And in the early 2020s, that's where I realized, okay, now Bitcoin has really grown. Now there's much more clarity about what Bitcoin is. Now Bitcoin is probably at a level where it cannot really be challenged by major corporations, major institutions or governments. It's properly secured. It's properly unattackable, or let's say resilient to attack, much more than it had been in the previous decade. And that's where I realized that actually, given this drop in the level of risk of Bitcoin, it was definitely time to look into this in more detail. And when I jumped in the rabbit hole, that's where I discovered all the other great things about Bitcoin, what it means well beyond finance or just a way to make money. It is, a new base for the monetary system. It is a new philosophical system on how you share value, how you transmit value over time. It changes your incentives. You could even attribute religious components to it, in the sense that it aligns with the values that are praised by many religions across the world. So there is so much around Bitcoin. It's such a rich industry and world. This is something that obviously you do not see at first hand. It took me years of studying it to discover it, but that's also how I came to the conclusion that there would never ever be anything more important to work with during my lifetime than Bitcoin, and that's how I made the switch. And I don't expect to move away from Bitcoin anytime soon.
Okay, so there's a lot in there, and you mentioned that concept of complementary currencies that you studied years ago. So, how well has Bitcoin fit that in your sort of studies of it, and how do you see it playing out? Or like, what's consistent with the theory of Bitcoin as a complementary currency, and how might reality actually play out a bit differently in your view?
Over millennia, people have evolved and transacted with multiple currencies working in parallel. In particular, there was gold that was used for long distance trade. I mean, you could go from Florence to Bruges to Amsterdam and trade with the same gold coin that was accepted throughout Europe and in many places beyond. And then for local trades, you had actually silver, typically much smaller denominations that were used for more local trades. This was a system that has worked for centuries and even millennia, and unfortunately a system that has been abandoned later, where with probably good intentions to make the system more efficient, let's have a single currency that we are all using. First in countries, and that's where in Europe you had the mark, the lira, the franc, and so on. And then they decided to go beyond just countries. They introduced the euro, so for an entire economic region, which, from the sideline, it looks like it is indeed a good idea. It is more efficient. You all denominate goods in the same unit, and it's more easy for trades. The problem to that is that economies have natural ebbs and flows. They grow and then they contract, and there's a natural cycle of credit expansion and then credit contraction, a natural cycle of trust in the economy, and then people being more wary about the future. And actually having a single currency is accentuating the impact of these natural ebbs and flows of the economy. It is actually making the cycles more harsh in both direction, and unfortunately on the way down it is destroying lots of businesses and lots of things that have been very difficult to build over years. Now, if we go with a system where you have multiple currencies working in parallel, you could tame a bit the intensity of these business cycles, and therefore not have throughs that are that deep. That's actually what the original idea of the euro was meant to be. So the euro was not meant to replace local national currencies in Europe. It was meant to come on top of national currencies in Europe. Unfortunately, this idea has been abandoned in the 1990s against the advice of several people that were behind the development of the euro, including one famous author that is behind much of the documentation on complementary currencies.
Okay. So you see a period where the euro and Bitcoin could coexist for actually quite a long time, or in sort of perpetuity, or does it have an endpoint?
So coming to where Bitcoin fits in that scheme. So today there are obviously complementary currencies. Bitcoin is one of them. So it is not used massively, but it is theoretically possible. You can buy your coffee, your car, even houses, or any software online with Bitcoin. It is possible, it is being done, and it is actually being done at an increasing pace, especially since the development of layer 2 solutions that enable immediate transaction at virtually no cost, like the Lightning Network that is probably the most famous of them. Bitcoin is very slowly implementing itself as a complementary currency, somewhat a replacement for the usage of fiat currencies. However, I don't think that it will replace fiat currencies anytime soon. The same way when television came up, it started to take a market share of the radio. It never completely replaced the radios. You can still listen to the radio and it still has some use cases. For example, when you're driving, you do not want to watch a screen. You want to listen to something, and the radio can still have value there. I think that we will actually face a similar situation with Bitcoin entering the monetary space. It will not completely replace fiat currencies, but it will first take a share of their market, and then eventually you will have fiat currencies that will integrate Bitcoin in some way or another. For example, having a Bitcoin-backed fiat currency, the same way we had a gold-backed fiat currency. And then, eventually it will probably have a dominant role where you will have, Bitcoin, and probably alongside other types of digital assets, be it centralized digital assets like fiat currencies, or somewhat decentralized digital assets, as we are seeing some of the altcoins trying to achieve, even though so far it's still blurry whether and which would ever achieve that.
Okay. And also what you touched on before, it sounded like the transformative sort of impact of Bitcoin as well. And you sort of mentioned your transition from traditional finance to Relay. So maybe now's probably a good opportunity to sort of switch to talking about Relay. And for those listeners that aren't familiar with it, what can you tell us about Relay, and what its mission is, and what drew you to it?
Relay has a very simple and straightforward business model. So you send us Swiss francs, we send you Bitcoin straight to your own custody. So I'm mentioning Swiss franc, of course, euros also work. So you send us, and the Bitcoin come straight into a wallet to which only you have the keys. So we do not custody your coins. We do not outsource the custody. It is really you and only you who has access. Relay is a Bitcoin only platform. It is a self-custodial only platform. It is basically we are trying to build on the fact that we are Swiss made, and with the at least perception of quality that we have tried to strengthen that image and therefore give the highest possible level of cybersecurity that you can imagine for your coins. So a simple and straightforward way to buy, sell, and transfer Bitcoin in your own custody. I do hope that it is currently indeed the easiest way to buy Bitcoin, to send Bitcoin, and probably one of the most secure way to do so. Of course, you can connect directly hardware wallets and then send Bitcoin straight to not only to self-custody but self-custody on a hardware wallet to even increase your level of security. And now we are launching products that go around Bitcoin. So also via partnerships, things such as Bitcoin-backed lending, hardware wallets. If some people want to custody, this is also something that we have partners that can offer. And of course, the industry is evolving fast, and we are trying to bring in new products and new use cases for Bitcoin, but always with the spirit of Bitcoin only, self-custody only, and with the highest possible level of security in the simplest possible way.
Okay. And from what I understand, you're both the COO and the CFO there. So what's it like holding those two roles? And what does that mean your typical day looks like?
Yeah, in startups, you often have to accumulate roles because you do not have enough people to be able to spread the roles across the full scope. So actually, since I joined, I was, I think, employee number 31. I was fortunate enough to get the responsibility for the teams of finance, operations, compliance, legal, and HR, which is even beyond what CFO and COO would strictly contain. We have great people in the team, and therefore I can rely on them massively. And fortunately, because I obviously would not be able to do all of what they are doing, not anywhere near, and definitely not as well as what they are doing that. So it is a lot about trying to manage people, to lead people in a smart way. So empowering them, so, trying to remove barriers for them to do the work rather than trying to micromanage them. I neither have the want nor the ability to micromanage anybody in my team. And I think that by empowering the people in the departments I mentioned, this is really how I really managed to get ahead and become one of the top companies in the Bitcoin only space. And I definitely cannot take all the credit because Bitcoin was already fantastic well before I joined it. So before I joined it, Relay was literally between doubling and tripling its size every year of the previous 4 years. So since its inception, on average, times 2.5 times volume, revenue, users every year for 4 consecutive years. So now that we are about to get our MiCA license, fingers crossed, in the coming month, hopefully, and if not, hopefully very soon thereafter, we will be able to go full on the European Union market and expand well beyond to be able to bring Bitcoin to more users and to more Europeans who need it. And after that, hopefully extending even well beyond Europe.
Okay. And how would you say that Relay is incorporating AI into its operations to sort of improve productivity and quality? And how is that similar or different to some of the larger traditional firms that you might have worked for in the past?
Well, in my previous company, it was easy. There was this new tool, ChatGPT, and then soon after it was released, well, all the employees were literally banned from even accessing the webpage of ChatGPT. So that was their AI strategy, just banning everybody from using it. And that's obviously not a winning strategy, especially not in the face of great innovation. And Relay is taking a very different stance. Of course, we put an enormous emphasis on using AI tools the right way, especially to maintain confidential information, especially information about users that there we would never share with any AI tool ever. But for, our day-to-day job, we are using very many different AI tools. I mean, it goes from understanding compliance curriculum better. You have tools like, let me avoid putting names. I'm not here to promote any special AI tools, but we are using that, so AI for compliance, for legal topics. We are using it for, of course, developing. There are some AIs that are great for front-end developing, other for back-end developing, and it's evolving at a pace that is rather mind-blowing. And the tool that might be the best in the market in 1 week, just a couple of weeks later might no longer be the case. So it's about always staying up to date, trying new things, trying all these AI tools, and trying to get the best possible output in all sides of the organization. Going from assessing CVs of people applying to the company, of course, in a way that is accepted by the applicants, to respect all data privacy and compliance rules, but also, as I mentioned, compliance, legal, operations, obviously, even analyzing invoices, preparing how you deal with invoices, how you sort them out, for the operations, the flow of capital, how fast and how to optimize your processes, and definitely in the development and the product management of the company. So AI is all around Relay, and we really think that the same way a company in the 90s would be ahead of the pack if it was using the internet, well, we think that today a company will be ahead of the pack in its industry if it's using Bitcoin as capital and AI as productivity tool in basically everything it's doing.
Okay. And that probably takes us nice to the next question. Like you mentioned, you're across a lot of different departments, from HR to compliance, finance, etc. For people that are Bitcoin curious, or looking to make the move yourself from another industry into a Bitcoin focused one, what sort of roles or industries is it hard to source people for? Where people that are looking to come across into a Bitcoin focused company might find it easier, or where do you guys found it easy? Where have you found it difficult?
Yeah. So we have more and more people that have a Bitcoin background in the developing space, even though, finding good Bitcoin experienced developers is always a challenge. And especially now in the age of AI, you do not want, junior developers who do not have much experience. You want actually the extremely good ones, because a good one that is using AI, it's like as if he had a full team of junior developers working for him. But you need somebody who is able to see the big picture, to use that team of developer, the AI team of developers, the optimal way. Now, I am currently recruiting a finance controller to help with the finances of the company, and I have to say that it is rather challenging to find people with a finance background that know a little bit about Bitcoin. And I'm not talking about having read the Wikipedia page of Bitcoin. I mean a person who can really articulate why Bitcoin is valuable, why Bitcoin is different from any altcoin, why Bitcoin is superior, why is it a hedge against monetary debasement. Somebody who can actually articulate the whole story, the whole value and behind Bitcoin. Because I believe that the traditional financial system will build your knowledge in a certain way, that you are used to seeing the world in that way, and then you have Bitcoin that is a complete outlier, and you need to open your mind to understand how actually the way how you were built fits with the legacy system, but is probably not adaptable to what the future will look like. And you need people who are able to see the big picture, who are open to it, and spend enough time learning Bitcoin. So finance is probably the most difficult place to find Bitcoiners.
Okay. And that's interesting. You touched on something interesting there too that, you probably covered in your book. So the book you wrote was called Understanding Crypto Fundamentals. So when people don't seem to understand the difference between crypto and Bitcoin, what's a way that you can help sort of explain it to them without getting too deep into the weeds and losing them?
All right. So I'll try to touch a little bit on the fundamentals without going too deep as you request. So Bitcoin was built with blockchain technology, or rather blockchain technology was built, set up in order to make Bitcoin work. Blockchain technology is nothing else than a database, yeah, and actually a relatively inefficient database. You have other databases that are faster, cheaper, and more efficient in any way than a blockchain. However, blockchain has one characteristic that none of the others have, is that a blockchain enables to create decentralization. You can move a scarce digital asset without requiring a centralized party or without requiring an intermediary. If you send money from one bank account to another bank account, well, you have the bank in between, you have the payment system in between, you have sometimes even more intermediaries that enable the transaction to happen. Now, with Bitcoin, you do not have all these intermediaries. You can really trade peer to peer. This is enabled via blockchain technology. And this is really the only value of blockchain technology, enabling decentralization. So, because this is the core function. I'm insisting on that because it is absolutely crucial for what's coming. Now, Bitcoin has managed to build a high level of decentralization in the sense that there are no central party or group of people that have the power to materially influence how the protocol will evolve. If there is a person, even a group of people saying, well, we would like to increase the total number of Bitcoin and actually give every 10th Bitcoin to us, well, that's not going to happen. There are people who have tried to change the protocol, for example, to extend the number of, let's say, the size of every block on the blockchain. So how many transactions you can put per every block, so every 10 minutes. And that has miserably failed in, was it 2017, 2018. And the people who were actually pushing for a change of the protocol of Bitcoin were actually rather influential people. And through this phase of history, Bitcoin actually proved that even when you have influential people in the space that are trying very, very hard with all they have to change the protocol, even that does not, even in these cases, that does not happen. So Bitcoin proved that it was immutable. The protocol, the rules of the protocol are immutable. There will never ever be more than 21 million Bitcoin. There will never, be Bitcoin moving on chain at a faster pace for a continuous period of time than what the pace at which it is set to be. You just name it. There are rules of the protocol that are agreed by everybody, and they are very, very difficult to change in such a way that, practically speaking, they're just next to impossible to change. Now, in comparison to Bitcoin, you have also all the altcoins that many pretend to be decentralized. Some do not even pretend. They are fully centralized, but let's not talk about the ones that are fully centralized because they obviously have no value. I mean, this is more like a private company releasing a token. This is absolutely not something decentralized, regardless of whether they are using blockchain in the background or not. But even those who pretend to be decentralized, well, actually, if they change rules of the protocol every 6 months, like you are seeing on many of the big ones, or if they are changing essential basics of the protocol, like moving from proof of work to proof of stake, well, you are just proving to the world that the rules on which you are playing are absolutely not fixed. These rules are just dependent on whatever the leadership is deciding. And even talking about leadership is proving that it is centralized, that there is a single point of failure. Even if leadership was well-intentioned, the fact that they are identifiable and that they have so much power over the protocol makes the protocol weak, because people can be corrupted, they can be blackmailed, they can, a lot of stuff that can happen to them. They can just change their mind on something, and then the protocol itself will change, and all the value that one could derive from the protocol would just evaporate. So, and Bitcoin is really the only one that has proven over now 16 years that it has a fixed, immutable protocol, rules that are clear, decentralized, that nobody can influence in a material way. And therefore, with this value of decentralization, you have, a coin that comes out of it, because you have Bitcoin, the network, and you have Bitcoin, the asset that is native to the network. This asset can provide a certain level of certainty to its users, to its investors, so that they know that the asset will fundamentally remain as it is. You would not buy a bar of gold if you knew that gold in the future might become less scarce, might become less durable, might, whatever, or that just there is somebody who could change the chemistry of gold and the physical characteristics of gold. Well, for the same reason, you would not want to buy a digital asset whose digital characteristics can change over time. You want one that is immutable, like gold is, like Bitcoin is. And it took me a couple of years of research and writing a whole book about it to actually get my head around the fact that there is value in digital asset, but this value is centered around a level of decentralization that is secure. And so far, the only asset that has proven to be both decentralized and secure is Bitcoin. Now, it comes with a lot of other characteristics that are, valuable, including liquidity, visibility, portability, and so on. But the essential characteristic is really decentralization in a way that cannot be challenged, in a way that is more secure than any other digital network in the world. And that's how I came to the conclusion Bitcoin is really the asset that has the value that will most likely gather most, if not all, of the value of the digital asset space. And that's where I decided to spend all of my focus.
Thank you for taking us through that. That's really helpful. And I hope a lot of people that are still wondering what this is all about, it helps them sort of join the dots as well. So when the word decentralization gets used so much, I guess what we're really saying is that this changes the trust model in how people use money. And if your crypto doesn't change the trust model, if you're still relying on trusting a founding team or someone else, then you don't need a blockchain to do that because
Exactly.
you're still doing you're still reliant on a founding team or another counterparty anyway. So when you've had these conversations or tried to sort of educate people or former colleagues in the traditional finance world about Bitcoin, what sort of reactions or objections do you get, have you found?
Actually, I do not get like straight aggressive or hostile reaction. It's not anybody who has spent more than 5 minutes thinking about Bitcoin is already getting rid of the most lazy critics like, oh, it's a Ponzi scheme. Well, actually, if you're saying that, either you don't know what a Ponzi scheme or you don't know what Bitcoin is, or you know neither of them. But anybody who has spent more than 5 minutes about learning about Bitcoin knows that there is actually some basics, and it's just that it's too new, it's too foreign. And I mean, I get it. How can you be sure that in digital code that there is not backdoors that could break the whole value of the blockchain? How do you know that there is not a Satoshi Nakamoto that still has access to his coin and that could even steal coin from somebody else? You need to be relatively deep in the tech to be able to see that for yourself, or you need to do your research and to understand that there are sufficient number of people that have gone through this, that have tested it, and that have indeed realized that there is no backdoor, that there is no way to steal coins. It's actually a relatively simple code, fully open source, fully transparent. Anybody can see the code. Anybody can fork the code if they want. Anybody can attack the blockchain at any time. It has been 16 years. It is worth $2 trillion. So if you manage to break the Bitcoin blockchain, you could actually steal quite a lot of value from it. So there's this, this bounty pending for anybody who wants it. But so far nobody has managed to do that, and it looks like in all likelihood that breaking any algorithm of the Bitcoin blockchain will not happen anytime soon. And even if, for example, through quantum computers, there were some aspects of Bitcoin that could be more fragile in the future, there is actually ways to make Bitcoin quantum resistant. So even this argument does not have legs if you consider long term and the incentives of the people involved in the Bitcoin ecosystem. Let me add that Bitcoin has by design a self-healing feature. If you want to fork the Bitcoin code, anybody can do that. And then whatever people decide that Bitcoin is Bitcoin. So even if there was one way to break Bitcoin, well, there would be another fork and there would always be one Bitcoin. So this is an anti-fragile mechanism intrinsic to how Bitcoin works that is extremely important to understand. Even if there was an attack possible, even if there were incentives to attack it, well, Bitcoin can always evolve and continue even in edge cases. So it makes Bitcoin blockchain just next to unattackable, so unfallible to any attack, and it strengthens the network in a way that no other network online can claim.
Okay. And you talked about earlier about Bitcoin being a digital asset. And for the audience, I guess that means it's different to the digital money in your bank account. It's different to the digital equities in your share account as well. And when you talked about Relay before, custody seemed to be at the foundation of that offering. So, for the audience, how should they think about how custody of Bitcoin is different, and how do you think custody models should evolve in the space over time?
So nowadays, there are actually very few assets that you can self-custody. If you have a bar of gold, well, you can have it under your mattress or in your pocket. You can self-custody it. But even most of the gold, if you buy gold, you buy exposure to gold. You buy an ETF, or even you buy gold in the vault of UBS under Paradeplatz in Zurich. You do not really have the physical ownership of the gold. Even money on your bank account is nothing else than digital figures that are held by a company behind it. And if, as we have seen in a small island in the Mediterranean just over a decade ago, if the bank decides that they will take the money of the citizen to bail out their the bad consequences of the unreasonable level of risk they have taken, they can and they have in the past taken money of people to pay for their own bills. So even the money on your bank account is not really yours, and you definitely do not have control over it. Bitcoin, in contrast, is very different. All you need is to remember 12 words. 12 words. Actually, a 4-year-old can do that. Remember 12 words, and then you can carry around $1 billion or more of Bitcoin across the world. You can cross country boundaries with it. Even if somebody physically assaults you, they cannot take the Bitcoin from you. You can do whatever you want. You can send it from one account to another account at any point in time, and there's not one person or institution or government in the world that has any say in it. No matter how powerful they are, no matter how, whether they have a gun to your head, they cannot prevent you from making transactions. They cannot prevent you from having the real custody of your Bitcoin. So there are few assets that enable real custody, and Bitcoin is really the only digital asset that enables real custody of the asset in a way that cannot be taken from you. This is something extremely powerful. For example, imagine that you are trying to restore free speech in regions of the world that are lacking it. You want to go there, interview people, do some kind of positive acts in these countries. That would probably not be at the liking of the local governments, who might try to, freeze your accounts and so on. Well, with Bitcoin, you enable people from going around the power of totalitarian governments who are trying to freeze funds and enable you to do, use your funds to do what you think is best. So, survive, be able to buy food and shelter and bring the possibility to do plenty of good things. And I'm mentioning free speech because Bitcoin is actually directly linked to free speech. If somebody can freeze your account depending on what you say online or offline, well, then either they will censor you, or some people will self-censor, which is absolutely scary to imagine that people need to self-censor just to ensure that their money is not taken from their account, that their account is not frozen. And that's effectively the end of free speech. And without free speech, you do not have democracy. You have, without free speech, this is a free fall towards totalitarianism, a scenario that unfortunately history has known way too often. So I believe that free speech is extremely important, one of the most important things in the world, and Bitcoin is actually a tool, one of the only tools that genuinely enable people to have free speech, because nobody can prevent you from holding your wealth, and therefore it's much more difficult to censor people.
Great. That's really fascinating, and thank you for laying that out so much in depth as well. So we're coming to the end of our time now. I'd probably like to just sort of step back and take a broader look at some things happening in Bitcoin right now. So as your role as a CFO, you've no doubt seen what's happening right now with Bitcoin Treasury companies. Is there a take on this sort of phenomenon that you'd like to sort of put forward, or what are your thoughts about what's happening at the moment?
All right, if we start with Bitcoin Treasury Company, that's a whole new conversation that starts. We can spend hours on this. Look, I'll try to stay short. You have some big companies that understood that Bitcoin is digital capital, that traditional fiat capital is actually like a person that is bleeding out. You have, the core of your of what makes your company work that is actually losing value over time, and therefore prevent you from growing, from delivering returns to shareholder. Now, with Bitcoin, an asset that cannot be devalued purposefully by a centralized entity, you have actually a base on which you can then start building a company. So you have companies that are doing Bitcoin treasury companies as a financial asset, like the most famous of which is obviously Strategy, having now over 600,000 Bitcoins and creating a full range of financial products that are tied to Bitcoin. Michael Saylor is famously creating now a yield curve for fixed income products that are backed by Bitcoin, depending on different duration of the financial instrument, different level of returns, and creating basically a market for fixed income instruments backed by Bitcoin, on top of having created an equity market for Bitcoin through the issuance of several types of shares, preferred shares and so on, that are also backed by Bitcoin. So you have the companies creating financial instruments. But what I'm more interested in are the companies, the operational one, that just understand that in order to build your operation, you need to have a healthy basis. You need to have your core capital in an asset that is liquid, but that is not being devalued over time. You do not want to hold cash. You do not want to hold bonds, which is nothing else than cash in the future with some counterparty risk on top. You want to hold an asset that does not have counterparty risk. You want to hold an asset that does not have devaluation risk. So you want to hold something that is stable. And this is obviously Bitcoin for all the reasons I've mentioned so far. And we are seeing more and more of these companies starting to build up. Bitcoin Relay is providing Bitcoins to many of small and medium-sized enterprises in Europe. And you are seeing people such as, construction companies, dentists, accountants, just name it. You have all types of companies that understand the value of Bitcoin. And for the same reason, it is valuable for an individual, a family. It is also valuable for a corporation, institution, trust, or even government. It is valuable for everybody. It is just a new type of capital that sets a new standard. And many of these treasury companies are building now on this new type of capital that is superior to anything we have known before. So I do think that companies accumulating Bitcoin is not a bad thing. Quite the opposite. It is the logical next step in Bitcoin becoming mainstream, in Bitcoin growing to become the new standard.
That's very helpful, and hopefully the audience finds that beneficial if they're wondering what all the talk about Bitcoin treasury companies is about at the moment. It seems to be everywhere in the media. But aside from Bitcoin treasury companies, what else excites you most about Bitcoin or the Bitcoin industry? What's happening in the space at the moment looking forward?
One of the trend that is actually rather powerful right now is Bitcoin-backed loans. So you have, it was the first step to buy Bitcoin. Then people realize, well, I do not want to sell my Bitcoin because, well, it has been compounding at a very high rate, and they do expect it to continue compounding at a much higher rate than anything else they could do with the money. So they do not want to sell the Bitcoin. They also do not want to trigger, in many cases, a tax obligation by having a liquidity event by selling the Bitcoin. And therefore, they are putting their Bitcoin in collateral, getting a loan in fiat, and typically the loan is repaid by itself just through the appreciation of Bitcoin. Then, currently the rates of the loans are still, let's say, higher than what you would find with, for example, mortgage-backed. So real estate-backed loans, so a mortgage typically. But there is more and more players in the space. There is therefore pressure on the margins, and therefore the Bitcoin-backed loan market is becoming very interesting for users. The use case for it is becoming more and more clear for users, and I believe this is one of the great development for the, let's say, coming 5 to 10 years that will create a lot of value for people and for the industry, and especially the companies that are enabling this service.
Okay. That's something that Relay is looking to launch in the near future, or it's on the roadmap?
We already offer it via partnerships. So we do not do the loan ourselves, but so any person coming to Relay and so buying on Relay and asking for getting Bitcoin back loan, we can point you in the right directions, have very good deals, and offer something of value for customers.
Fantastic. And Thomas, just to finish up, for the traditional finance people watching the podcast, what advice do you have for them who are at least curious about Bitcoin or want to know more?
Just get started. Yeah, just buy your first, even if it's 50 euros, just send 50 euros, get the Bitcoin, play with it a bit, send it back and forth to one address, to another address, to self-custody. Keep it there for a while, understand that it's actually really in your custody. Try to pay for a coffee with it and see how simple it is. It is in many cases more simple to use Bitcoin than to use a traditional banking account. See how, you can make transactions without anybody asking you anything. You can transfer it anywhere without having to face 3 days delay or wait for Monday to arrive or for the end of the public holiday. So just try, get from 0 to 1, and then, Bitcoin will do the rest. The quality of Bitcoin technology will be convincing enough. You just need to try. And if you want to know how, there are countless quality educational videos online, podcasts, books. I mean, there are more quality books about Bitcoin than you could probably read in the next 10 years. So just get started. Pick one book, buy a little bit of Bitcoin, play with it, and then Bitcoin will do the rest.
Great. Thomas, I want to be respectful of your time. Thank you for being so generous with it and, sharing your thoughts with us today. And thank you for joining us on Bitcoin for Professionals.
Well, it was a pleasure. Thank you for having me.